Hi everyone. Today markets tried to rebound slightly and ended up pulling back right to the key level here at 585.91. Closed right at the level, selling just a little bit after hours. We'll see if this is going to hold up or not. Let's take a look at all of the charts and see if we can find some direction. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Looking at news today, we have Trump endorsing the GOP deal to avert a government shutdown, suspending the debt limit. Pretty interesting to see him saying that, considering that he did campaign on bringing down the debt limit and along with Elon reducing government spending, getting a little bit of a flip-flop there. But they're trying to keep the government open, and he did endorse the package that they had, and then in the end it did all kind of fall apart with Trump and Elon coming in against the bill, highlighting some of the ridiculous spending that's inside it. Some of it was good, with $110 billion for disaster relief as well as farm aid, but there was a bunch of junk in there as well, and a suspension of the debt limit for 2 years, which again I don't think is a good policy, but we'll see what they come up with now and just understand that the potential for a government shutdown is out there. I don't think it'll have a huge impact, but at this point it seems like it could happen, at least for a short period of time. Moving over to Fear and Greed Index, this fell a lot to a 23. Typically, I would say a 23 is a good time to be buying. In here, you can see 23, 24 was a good time, ended up going much, much higher. Same here, 28 was the low, and then we ended up rallying from there. But like I said before, markets have had a pretty significant shift, in my opinion. Extreme fear across the major indicators here, very, very low number on breadth. Put-call ratio spiking. It's not anywhere near these kind of peak levels we see between 0.85 and 0.9, somewhere in there. Gone a long way to go at just 0.68. VIX did spike yesterday, pulled back slightly today. Extreme fear on safe haven demand, junk bonds back into regular fear. So every metric is in fear or extreme fear. Like I said, usually that's a pretty good time to be entering to the long side. But I think the shift from yesterday's FOMC is probably going to send these markets lower, even if we see small bounces in the short term. Seasonally, this is Santa Claus rally period. We're supposed to be entering the bullish period into the end of the year. You can see this is where we're at here. Supposed to go much, much higher. Obviously, markets have not been doing that. We've been going lower, especially after yesterday's catalyst. But just understand, maybe this is holding up markets a little bit, but I just don't see this coming to fruition, at least this year. Moving over to the economic calendar, continuing jobless claims a little better than expectations. Core PCE number a little bit hotter as well at 2.2 versus 2.1 expectation. GDP number also very, very hot there at 3.1. Maybe that gave markets a little bit of a pop early in the session, but ended up selling off after that. Initial jobless claims continuing to hover there. Philly Fed manufacturing very, very negative, another negative indicator. And then looking at existing home sales, 4.15 million, a little better than expectations there. Existing home sales percentage month over month, also better than the previous. So that's pretty good. Some good economic data. Philly Fed, terrible. Jobs data, okay. And then we do have that PCE price index for tomorrow, corn headline, Michigan data, and then consumer sentiment. This could be interesting, especially after what we saw. The core number is supposed to step up a little bit to 2.9 from 2.8. Headline number, 2.5 versus 2.3. Month over month number is relatively flat. So if this gets a little bit hotter, I think that could be a catalyst to the downside. Moving over to Max Pain, stock price 587, Max Pain 580, so a little bit lower till we hit that Max Pain number. Obviously, we fell well below those indicators that we thought. We were looking at 595 as a potential point where markets could hold. We've obviously fallen well below that. Right now, 580, Max Pain, that's where you should see a little bit of markets holding 580 to 585. I would expect a little bit more downward movement into tomorrow's session. Put call ratio is going a little bit higher now at 2.2, not anywhere near some of the levels we've seen before, but this big call wall ended up being a very strong call wall, pushing markets lower. Total options, 5 million, pretty high there for a quad witching. Either way, 575 is your big put wall, and I do think we'll close above that, but 580 I think is within range. Maybe we touch that, rally back to this 582, 583 right in here. That would make sense to me. Moving over to the charts, looking at the SPY, you can see we had a pretty healthy bounce into the open, about 0.5% or so, and then we sold all of that back, closing negative on the day, 0.03. It's still at the level, 585.91. Momentum bearish, RSI bearish. We're right at the lows from middle of November time period, I still think we're going to go back and fill this gap, and I think that's the big risk here. The close of that candle is 576.70. I don't know if that's necessarily going to happen in one day, probably not, but over the next couple trading days, I would expect it to move into this area, fill this gap here. You can see not a lot of volume in there, big volume here. Might have a little bit of resistance in here with this consolidation between 580 and 583 or so. But once 585 goes, I'm expecting it to push through here, get the gap fill, and then maybe we see some kind of bounce. We're not oversold yet on the daily, which is at 37.47. So looking for that to hit oversold conditions. And you can see this here on the hourly chart. Rallied up, hit VWAP, sold off. It did hold a slightly higher low here for a moment, hit VWAP again, and then sold off, closing arguably double bottom, 585. Maybe you're trying to trade off of that. I wouldn't. I would be patient here. I think this is probably going to sell. Even if we did see rallies into here, I think we're going to get big selling pressure. And remember, max pain is to the downside, so that should be more bearish pressure for tomorrow's session. Moving over to the S&P charts. On the Tasty charts, we did finish right at that lowest ATR band. 586.14 is the band. 586.14 was the closing price, so right to the penny at that lowest ATR band continues to be your resistance. We can absolutely overthrow it, but once you hit this lower band, usually that means you're going to see lower highs and lower lows. Just like as we hit these upper bands here, we did see higher lows here and higher highs. Again, huge selling volume over the last 2 trading days, both selling candles. Everything looks bad. Next support here on the daily chart is going to be that 89 EMA down at 579.75, which again would give you that gap fill that's pretty much in line, just a little bit before the gap fill back here to that 5 November candle. That's really the price target that I'm looking for in the short term. Doesn't mean you can't see some bounces, but you're in bearish conditions, looking for the gap fill there in my opinion. Moving over to the NASDAQ, similar thesis to the SPY charts. You can see we did finish down about 0.5% after going up about 0.5%. Again, closing bearish, momentum bearish, RSI bearish. Big volume to the downside, broke my level here, 514.92. Just trying to figure out where this level should be in terms of where market is respecting that level. You can see yesterday we touched the high back from this 11 November candle. Today we closed right at the close price here from 8 November. But I was working off of the wick high, which is my level here, 514.92. And technically here we closed below that at 514.17. So the NASDAQ showing a breakdown while the SPY is holding at the level. So interesting to see that. Really, you need both of them to break. The SPY, if it holds, can absolutely hold up the NASDAQ, and that's something to watch here going into tomorrow's session. I still think it'll go. Everything says bearish across markets, but really I want to see that SPY break down, and then looking for the gap fill back here. You have one to 29 November. Right at the level here, 509.74, which is right here at the closing price from 29 November. So gap fill, looking for that. Got the level break here. Should get continuation to that 509 area, just below 510. And then if that breaks, the next level is your 55 EMA all the way down at 504.68. Everything says this should sell. It's just really seller's exhaustion. It's right at those upper limits when it comes to ATR movements, even to the downside. So I think this is going to go, and we have a couple of price targets. If it gets back above 514.92, you do have some trend resistance in here. Currently using that as a short-term stop, but I'll be patient there. It is a little bit tight when it comes to short-term stops. And then looking at it here on the hourly chart, you can see we're pulling back right to that level. In the after hours price action, you can see the close below it, close below yesterday's price, momentum fading, RSI still very oversold, pulling back right to the key levels. Maybe we retest the trend in here and then sell some more. Obviously, everything looks bad here. You had a consolidation of EMAs, broke through all the structures. Everything is bearish, but seeing just a small pop in the after hours. Then moving over to the Tasty charts, we are officially in bearish conditions on the NASDAQ. We took out that trailing stop, which is basically right where we closed on yesterday's session. Took out that trailing stop. We were holding at the 34 EMA, which is at 513.75. Closed right at that level, just barely above it. Think we'll break through there. Your next support would be the 55 down at 506.44. Think we're going to sell some more through those levels. Then we'll see what happens. Either way, big volume, big selling. Any small buy-ups I would expect to be met with sellers, at least until we push to those lowest ATR bands. The SPY range was very tight, but the NASDAQ has more room That lowest band right now is at 597.93, and I think there's plenty of potential and opportunity to push into those levels, push to that 89 EMA here on the daily chart. Remember, it's a daily chart. It can take a couple of days to get into that range, but I think that's where we're going after we've seen the shift in sentiment. Moving over to the Russell and the Dow, the Russell was down 0.44. The Dow actually managed to stay just barely positive, 0.07, after having 10 negative days in a row. Still well below the 426.20 level. Again, I think this is really just seller's exhaustion. I think we're headed for the gap fill on 5 November. The close there was 422.04, so looking for a touch there before we see any kind of changes here. It is super oversold on the Dow. Momentum still very bearish. Same here on the Russell. Huge volume, huge selling. RSI oversold at a 29.84. Momentum obviously still very bearish. And for the Russell, your support here is going to be 218.13. I wouldn't look for anything until we touch those levels. You also have the 144 EMA in here as well at 217.92. I would be looking for touches in that level before we see any kind of movement up. Obviously, we've round tripped this move back into this consolidation here. Sometimes these kind of round trip moves can find support in here where you get a huge spike up, touch that level again, and then spike up again. I don't think that's going to happen in this case, but either way, something to watch for. 144 EMA in there. Moving over to the Mag 7, negative here, just 2 cents on the day. It's right at that trend. Momentum still very bearish. RSI still very bearish. Seeing a slight bounce after hours. Again, I think this is going to break. I think we're headed to the 21 EMA, which off of that closing price is about another 2.5% lower. Price for that is going to be 313.89 current price, 323.18. Again, bouncing just a smidgen after hours. I don't think that's going to mean anything tomorrow, but I think that's where we're going once we get this breakdown here, and that's going to be a change in structure. Been in this kind of trend structure here. Right now, looks like we're going to see a little bit more selling in tomorrow's session once we get that trend line break. Moving over to Apple and Microsoft, Apple managed to hold on to some of those gains, 0.7% on the day, back into the middle of this candle from yesterday. Almost retraced the entire move, pretty strong there, and then did fall back into the middle range. Momentum still bearish, RSI still bearish. Still looks like a topping pattern, but it's holding up much better than markets with a positive day. And then Microsoft pretty much in line with markets, closing just barely negative. Retested the level 440.72, broke back below it, back into this range here. 21 EMA as support, 435.20 is the level. Small bounce after hours, momentum bearish, RSI bearish. Still think this is going to go a little bit lower. You also have a gap fill back to 3 December. The close from that candle is 431.21. And then I have my level here, 429.88. This is the zone that I'm watching for. I do think it's going to go down quite a bit from current price. Moving over to Tesla and NVIDIA, Tesla sold off nearly $4, 0.9%. Touched the 9 EMA, overthrew it pretty substantially, looking for a 414.50 touch. Momentum bearish, RSI bearish. Volume, pretty much same thesis as everything else. NVIDIA holding up pretty well, 1.37% to the upside. Still holding that 130.35 level. Tested it again today. After gapping above it, retest it here. Maybe you find a little bit of support. If you want to trade 130.35, I think that's a reasonable level. Also saw a step towards bullish momentum there. Maybe NVIDIA catches a little bit of a bounce here after this pretty bearish structure. Still didn't touch the 144 EMA, which I don't love, but in terms of relative outperformance, NVIDIA doing quite well relative to markets. Moving over to Amazon and Google. Amazon slightly positive here as well, 1.26%. Inside candle, momentum still bearish, RSI still bearish. Still want to see it come back to the 21 EMA and trend support in here around 217 to 18. And then once we hold support in here, then I could see it bouncing. If it breaks that support, then you're looking for around the 209.50 area. Overall, this is still a bullish trend for now. And then looking at Google, fell, gapped right to the level 193.31. Open price was 193.28, so almost to the penny, opened at that level, and then sold off, finished bearish on the day, about 0.25%. Momentum still selling, RSI still selling. Looking for the 185.22 level. Clear topping pattern, clear wick rejection, confirmation candle. Everything looks like this should go some more. Moving over to Meta, big selling here, closed negative on the day. It is bouncing a little bit after hours. Below the 21, below VWAP, momentum bearish, volume ramping on the sell. Everything still looks bearish, just like everything else. And then looking at Broadcom, big sell there as well, about 2.3%. Broke the trend, interesting. Not bouncing as much as everything else after hours, momentum fading. RSI right at the SMA here, so we're going to get that touch probably tomorrow. We'll see what happens. Does it bounce a little bit from there? Certainly a possibility. If it cuts through there, I think we're probably headed back to VWAP. You can see how VWAP here is starting to flatten out with all the sellers coming in over the last 2 days, even with their massive earnings, critical points there. Obviously, big gap fills. I don't know if we're going to fill that gap. At least in the short term, that would take us all the way back into the 180s from the 218s. I don't know about that, but definitely seems like we could find some support in here. Maybe touch the top of this consolidation. That might be a little bit too much, at least in the short term, but it is selling off quite a lot, 3 bearish days in a row, and that trend break says this should go a little lower. Moving over to staples and discretionaries, still getting everything selling here, 0.71 for staples and 0.14 for discretionaries. Discretionaries still holding up quite well, interesting. Got VWAP and the 21 holding as support at 227.28. Once that goes, I think we're going to push into the trends here, and then potentially my level 215.06, which is your highly traded zone. Going back to this consolidation here, huge volume, momentum still bearish. Again, probably just extended in the short term. And then you got staples, pulled to the 144 yesterday, continued to sell through all the levels here. Next level is the 200, all the way down at 78.99. Big sells, big fake out now. So you had a bull flag, had the bull flag breakout, didn't complete that move, and now we've sold off massive, looking for this move back here. And then same metrics on all of the indicators, momentum, RSI, volume, everything says bearish. Moving over to utilities and real estate. Utilities had a big down day yesterday like everything else, but it did manage to stay positive here today. So people looking for those safer sectors, slight rotation into the utility sector with their dividends. Volume coming through today, nearly as much as yesterday's volume, slightly bullish there. Momentum starting to swing after hitting this 75.47 level. And then looking at real estate, absolute dumpster fire there. Down nearly 4% yesterday, down another 1.72% today. Broke all these levels. At this point, we're in this consolidation high back from December of 2023 and then the March timeframe 2024. Realistically, this is probably headed back into the 38 area, which it's not a huge move. $40 back to 38. If you're buying real estate, you're probably buying this for the dividends anyway. So about a $2 move on real estate, not that big, but fairly large on a percentage basis. Once you get into this 37, 38 range, I think that's probably a buying opportunity. Definitely oversold at a 20 on RSI, momentum bearish, RSI bearish, just like everything else. Moving over to yields, 2-year pulling back slightly. Interesting after the big update yesterday. 200 SMA acting as resistance still at the 4.375 level, and then looking at 10-year, another rocket ship up above 4.5. Again, first time we've seen that in a long time, going back to just a couple of spikes in April and the May time period before selling off big. And then you can see the real spike above the 4.5 level up to 5 took place into the September-October time period of 2023. So we haven't been here for a long time, and that did cause a huge shift in markets. That was the market bottom. Once yields started to turn, markets started to rally, and now we're seeing yields break higher once again through these key resistance areas. So yields looking very, very strong on the 10-year. Seems like these longer-term bonds are going to continue to trend higher, at least in the short term, even with the Fed saying they are going to continue to cut rates over the next 2 to 3 years. Moving over to the dollar. Dollar pulled back slightly, ended up rallying on the day again, just like everything else. This is the inverse of markets. Dollar went slightly higher. Equities went slightly lower. Looking for this to push up to the trends in here, 109.56, 109.5, somewhere in there. Momentum bullish, RSI is still overbought, but this is a fundamental move, and I do think it'll go a little bit more here over the next day or two. Moving over to JNK and TLT, 0.68 to the downside on JNK, big sells. Push to the next level, 94.82, like we said that it was going to, broke below that level. Momentum bearish, RSI bearish. Again, not a huge move, fairly large for bonds, about $1 lower there. Starting to fill some of these gaps from this rally here. And obviously with the 10-year rocketing higher, you have TLT breaking down into this consolidation low here from the April time period. Is that an opportunity? Maybe not, considering how strong the 10-year looks. Next level here for me, 85.90 with the big gap through that level, which would take you very close to these lows back here from November of 23, which was a very good opportunity to be buying markets between that 82 to 83, 83.50 area. If you did buy in there, you had many opportunities to sell with about a 20% move there. And then even if you missed that and pulled back, if you held through this rally there, that was another 15-16%. So I do think this is an opportunity in here. Certainly if we got into that 82.60 area, the volume was huge, 98 million on the day. So we'll see slight bounce in the after hours just like everything else, but I would be cautious. Right now, support for me 85.90. Moving over to the VIX, gapped down and rallied a little bit. Interesting. Let's go ahead and extend this out. Probably touch that. Yep, makes sense. Gapped almost right to the trend here. Ended up rallying through and then extending that out. Maybe you have a short-term target in there, 25.50. Momentum bullish, RSI pulling back slightly, obviously super overbought. I am still expecting this to overthrow the previous move, similar to what we saw here. So you had kind of big spikes, pulled back, rallied through, and then you had a big spike here. Big wick rejection, and then the big continuation up to those huge levels that we saw. Peak for that was all the way in the 65 area. I don't think we're going to get that high, but in the short term, I could absolutely see this going to the 28 level, maybe even into the 33 area. I think selling is coming. I think the VIX is still going higher. Moving over to my accounts, I ended up basically flat on the day, just a few dollars here. And then looking at my positions, 518 call, 519 call, two of those there for $1.50, $1.80 on that 518. Looking for some short price action. I have about total $5 credit there, looking for some downside movement. First time in a while I've been truly short the markets. Over the next day, we'll see if that comes true. Again, short-term bounce, watching those key levels. Wouldn't shock me to see just a little bit of a bounce there, but I do expect markets to go through those levels. We'll see what we get off of the PCE data. That could be interesting. I don't think it'll be enough to save markets, even if it does come in a little bit light. But either way, this is what I'm looking at. Just a little bit of short-term bearishness for tomorrow's session. If those key levels break like we talked about, I'll definitely get a little bit more short. But for now, this is where I'm at. Let me know down in the comment section what you thought of markets today. Does it reconfirm your thesis? Or do you think we're going to hold these key support levels, especially after we got into extreme fear on most of the major indicators? Definitely interesting. Otherwise, let me know, and make sure you like and subscribe and hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.